What a difference one trading day makes. Last week, we wiped out almost a month's worth of gains in 2 days and recovered the majority of that today with 1 trillion added to markets. Both the S&P 500 and Nasdaq closed their previous gap down opens, and markets really like the increased odds of rate cuts from the bad employment figures we saw last week. And we are now sitting at a 94% chance of cuts in September. So are we back on track for fresh all-time highs instead of entering a weekly consolidation grind? This chart would put the odds at 25%, but today got us a lot closer to checking all the boxes needed to make that 25% chance quite probable. So let's get into the charts for stocks, commodities, and crypto to discuss what we are looking at for this week to confirm either a quick recovery or a period of consolidation before another major leg up in the fall. Let's go. This isn't financial advice. Past results are not indicative of future performance. Do your own research. Welcome back to the Trading Apologist. My name is Tom, and no, my right ear is not trying to run away from my face. It was the victim of a friendly neighborhood bee sting, or as I like to call it, nature's drive-by shooting. I suppose nature's drive-by shooting would really be getting struck by lightning, so this was more like kids playing with a pellet gun. Anyway, I digress. Before we dive in, if you do find value in the content, please like, comment, or subscribe below. It really does help the content get out there to more people and means a lot to me personally. So today was truly a strong recovery for both the S&P 500 and the Nasdaq. Bulls stepped in to buy the dip aggressively, and this really put us back on track to see a quicker recovery. Just as we had a signal last week with those Wednesday FOMC lows being a leading indicator of more downward price action if broken, now holding the lows of last Friday will be that indicator for us to say if we're on track for that quick recovery or if we can expect more weekly consolidation. So right now, holding above that is a great sign of strength. If we look at this chart again, which I shared in the intro, you can see that 2 of the last 8 weekly engulfing candles that we saw in the S&P 500 fully corrected and recovered the following week. The other 6 instances took at least 2 weeks, with 5 of those 6 instances taking 3 to 4 weeks actually. If we break the low of last Friday, we should really be ready for a longer, drawn out scenario. Additionally, despite how bullish the price action was today, we shouldn't forget that since 1950, we have never seen a positive August in a second-term presidential year. Now, this is the first non-consecutive term, so perhaps this time will be different, but I just want us all to be balanced in how we're viewing the market without too much skew of a bias in either the bullish or bearish direction. On that note, crypto, while it wasn't looking very strong at the end of last week, has really mounted a strong recovery for that weekly candle close, and that price action continued today. So many of the breakdown levels we discussed on Friday have since been reclaimed, and I want to spend a bit more time there to update each of those charts. Remember that TA is a great tool to help us project potential scenarios and to allow us to make reasoned trading decisions, to give us a conviction in our trades. But price action is always king, and we can't hold to our thesis too dogmatically if price action is showing us something completely different. We need to adapt as the price action evolves, and maintaining your thesis in the face of what the price action is actually doing is a surefire way to get wrecked, as the kids say these days. So let's get right into the charts. All right, starting here on the S&P 500, and you can see we closed that gap exactly from the gap down between Thursday and Friday. So now the line in the sand is holding this low of Friday, which is coming in roughly at 6,212 right there. And the one thing the S&P 500 didn't do is it hasn't reclaimed the lows of last Wednesday on the FOMC press conference. If we go over to the NASDAQ also closed that gap. Our line in the sand now for the NASDAQ is 22,672. That's the low from Friday. And we also on the NASDAQ haven't reclaimed that Wednesday low of FOMC. Seeing that reclaimed on both these indices with a daily candle close would be a great sign for recovery. And the strongest sign would really be if these weekly candles can fully engulf this price action right here, those 2 days that we lost on Thursday and Friday. So that would mean closing above 23,600 on the NASDAQ this week. And if we go back to the S&P 500, that would mean closing above 6,426. Tech and AI really outperformed today, and looking to SMH, the semiconductors ETF, this had a very strong recovery. Of course, TSM and NVIDIA had a great day as well. If we look to MU, which we have been scouting for an entry, You can see we had a bit of a recovery on MU today as well, and I was hoping for a bit lower prices in that $100 range to retest this line, but we are bouncing after closing this gap right here at $104. And if we actually draw our Fibonacci extensions, I did not do this on Friday, but drawing our Fibonacci extensions, you can see that we bounced right from the 618 level, which is the second most important Fibonacci extension level there. The dollar is continuing to hold the line from this inverse head and shoulders breakout that we are now back testing. We had that pullback in the dollar. You would say, you know, with the sell-off last week, shouldn't the dollar rally when risk assets are selling off? But this is showing the dollar weakness on the increased odds of rate cuts. I still anticipate that the dollar is going to mount a bit of a bounce here before we see those rate cuts in the fall, but I think we are still in a macro downtrend for the US dollar. So that would mean a bounce. Our price target right here is at 101.8 roughly for the US dollar. That would also coincide with this dynamic resistance line from the Confluence model center cloud, depending on when we get there. So anticipate a move up there, and then I would say further rejection would still be in store. And my ultimate downside price target for the US dollar is 94.6 right down here at the support line. And if you haven't been following the updates recently, I should really go to the weekly chart, but that corresponds to these previous highs and lows and this big consolidation range right above those prices in December of 2021. Looking just briefly at REMX, the rare earth minerals strategic ETF, and this one I've been looking for a retrace for an entry after this move up. I'm targeting between $46 and $47 at that 618 level. You know, I just have this alert set a little bit earlier above these previous swings right here. We had a strong bounce away to start the week, so at the moment, it doesn't look like we are heading down that way, but I'm just going to be patient and give it a bit more time. Again, this is on the weekly. If we look at the daily, there you can just see a bit more detail in the price action. And actually, those alerts that I have set align with the Confluence model center cloud. When we're in an uptrend, we can anticipate support from that. And we normally get a couple of swings in this upper cloud before we correct. So that's what I am looking for on REMX. Moving on to Bitcoin, and we're just going to start on the weekly here. We've had this massive bearish divergence on the weekly RSI. So we are still looking for the breakout above this line. We have not done that yet. We haven't really tested it. But the good thing was on this weekly RSI pullback, we did hold this 62 level on the weekly RSI. And when we break below there, historically, we normally have a more meaningful correction. So that's a great sign, at least on the weekly RSI there. Now, just looking at the weekly candles, the two really good things, even though we broke down, this trend line right here, which is connecting our previous peaks in December and January, and this peak right here was our fourth time breakout. We did drop down from that level, but we reclaimed it on the weekly, so that's a good sign. And also we bounced exactly from the previous all-time high in this last consolidation range at 112,000, let's just say, slightly below that. But that was a great sign for Bitcoin. And now we have a green candle to start the week, and we really want to see this breakout level hold as support now. And we just need to keep our eye on this evolving price action over the next few days to see how things are playing out, if we can really mount a strong recovery. If we're looking at this on the daily, the line in the sand to really tell us that we're on for testing new all-time highs would be passing these previous swings right here at 119K. So just in terms of price structure, that would mean making a higher high compared to these highs. Then we can build our structure from there. So that 119K is that shorter term line in the sand that we need to get over. We also have this large volume cluster from this entire consolidation range that we need to contend with, which is right at 118K. And the last thing I will mention on the daily chart for Bitcoin, if we just bring up the RSI on the daily here from our April 7th bottom, we now have an uptrend on the daily RSI that we can map out here that we just bounced from. Yeah, we wicked it a little bit, but for all intents and purposes, this is holding. So this would be my first guide, a bit of a line in the sand just on the daily. If we hold that, then I'm assuming we're continuing in this uptrend. If we break down below that, I'm anticipating a bit more meaningful correction. If we're looking to Solana as well on the daily, the RSI also has a bit of an uptrend here from our bottoms in April that I am watching. It only has 2 touch points, so it's not confirmed yet. But if we drop a little bit more on the daily, I would be anticipating support in that range right there. The question right now for me on crypto is, are we bouncing here, or is the daily RSI going to reset more? If we look on the 4-hour, reset completely, but has moved fairly high considering the price hasn't moved that much higher. But we are now getting resistance at this previous breakout zone, which was right around $168. We're a little bit beyond that now, but you can see how that was resistance, resistance. When we back tested it, support, and then we broke through. Now it's resistance again. So this is our near-term hurdle right now that we need to get over. And I just want to also map out one of the price targets that we talked about last week. We had been scouting this falling wedge right here with the overhead resistance and this trend line, which we have since reclaimed, and we closed the daily candle back within this. So I think that means we can, right now, unless we break down, again, we can take this price target off the cards, and that price target for us was roughly down here at $140. And we always want to make sure that these price targets make sense in terms of landing at other areas of support. And $140 makes a lot of sense because we actually have this support line where all these previous bottoms found support. So that's a really strong level there if we do happen to drop a bit more. But if we go into the 1 hour, I'm anticipating right now, if we do have a little bit of a pullback because the 1 hour is to the top of the range, that perhaps we can now back test this trend line for support and move away. The other way I like to often see if we are mounting strength in a recovery is to establish some fans with our downtrending resistance. So we have this major downtrending line off the peak, and then off of this lower line, we can draw another trend line, which we have broken through and actually also back tested that as we moved away. And then you can also draw another downtrending resistance line like this. So as the price action is increasing in its pullback speed, you can have this series of fans to just give you some sign of a recovery mounting one step at a time. The other good thing is we have reclaimed our 200-day moving average. And as we talked about with this wedge trend line, a back test of this trend line break, if we had another one of those, I could see that resetting our 1 hour chart here, and then we could attempt that move higher. And in terms of resistance, we can just see as we're coming into that diagonal trend line, we also have this volume cluster and this previous line of resistance between 177 to 179. So that would be our next area to anticipate resistance. And beyond that, this trend line right here, which I can just extend out, that we broke down from, that was our support for the last month. Then as we break through, that would be our next area of resistance overhead. And these diagonal trend lines, they are definitely strong resistance and support, but the stronger support are these horizontal support and resistance levels that are connected to price action because they carry through time much longer than these diagonal trend lines. Now, the one thing I will say about diagonal trend lines, some of them can carry more weight than others. I would consider everything we looked at over here as local diagonal support and resistance. And if we go way back, we actually have a trend line that has been forming for the entire bull market since, what is that, January of 2024. It played support, support, bit of support, then resistance, resistance, resistance here again. And we just broke through that. And let's just make that yellow so it is a little bit easier to see. And we will zoom back in here. And you can see actually right now, we are just right into that line again. And it played a little bit of resistance for us here. You know, an exact dollar value, but it's more of a range with these levels. And it's just amazing to me to see how for a year and a half, this line has just been support and resistance on both sides of the market. Ideally, getting above this and holding above it would be a better position to be in, and we're attempting that right now, but we're just really into a lot of resistance right now between these previous peaks, this diagonal trend line, but it seems like we can hopefully get there. You know, the world in which crypto does have one more leg lower, even if Bitcoin doesn't make a new lower low, crypto could see a lower low, as crypto broadly isn't as strong as Bitcoin, but we just need to see how things unfold this week. And I really want to see us get above this diagonal trend line to confirm to me that we have a more meaningful recovery, because right now we don't have price structure yet on Solana. We have a bounce off the bottom, and actually I'm just seeing we also have this low right here that is playing a bit of resistance for us, but we don't have price structure of a recovery yet. So what we want to see is we want to make a higher low, and then we want to make a higher high and another higher high to start building positive price structure, as opposed to a downtrend where we have this lower high, lower low, lower high, lower low playing out. So let's just keep an eye on this week to see if we can truly mount a recovery. Just looking to ETH briefly here on the weekly, and we have continued to find resistance here just below these previous highs at around $4,000. And this is to be expected. There are a lot of, legacy bag holders and folks who have been up to these highs multiple times and didn't sell out through all these dips. And so that just means there is overhead supply right now. So it makes sense that people are selling as we get to this higher price point, but this can set us up for a potential cup and handle. It's a little too early to call, but you can imagine we have the cup here, and then we are potentially forming the handle. And once we get through all this supply and shorts are ready to be squeezed as we break through, that can set us up for an explosive move upward. And if we see this on Ethereum and we see Solana breaking meaningfully above, say, $220, I think that would really usher in the next phase of the bull run and a potential altcoin season eventually, because money is going to flow to these names first, and then as people have made their gains in the bigger names like Solana and Ethereum, then they start getting more risk on, moving into smaller cap alts, and it's just a cycle that repeats time and time again as people continue to chase gains as the bull run progresses. So something to keep your eye on here on Ethereum. A break above that $4,000 level would really be something meaningful. And one other chart I want to bring up, just in terms of telling us when we can expect more of an alt season, that would be the USDT.D chart, the USDT Dominance. So this is on the weekly, and when things are risk off and people are selling their crypto and Bitcoin and Ethereum and Solana, going into USDT as a stable coin. And so you can see in the last bear market, we have the June peak and the early November peak right here. This marked the bottom of the bear market. This had all the hallmarks of a bear market bottom, but it hadn't played out in terms of time yet. Price had gotten to an acceptable level, but time hadn't played out. So we had a bit of a recovery, that eventual bottom, and we have recovered since. So as this is dropping, expect more strength in your altcoins. And you can see here we had that early period in 2024 where we had a nice little altcoin season. Wish I would have sold some of them at that top. And then we had the end of last year, beginning of this year, as alts rallied a little bit. So breaking above this breaking below this 3.76 level would really usher in a more meaningful alt season. So mark that up on your charts as a line in the sand. You could even put an alert on there if you want. And the other thing I like to bring up over this is Bitcoin dominance. Often when the market is going risk off, Bitcoin dominance increases because some folks will sell their altcoins to go into Bitcoin. And here we've really just had a very interesting bull run where Bitcoin dominance has continued to climb. You know, we had some intermittent pullbacks here as we had this little alt season. This pullback wasn't as great. And then we've had this pullback here. So whenever you see these pullbacks in Bitcoin dominance, that's also signaling a rotation into alts. So if you map these two together, it can just give you a clear signal. If we see USDT.D dominance dropping, Bitcoin dominance dropping, that means folks are going risk on and going back into alts. Moving on to MicroStrategy, where we had a good recovery today, almost reclaiming all the price action that was lost on Friday. Not quite, because we gapped down a little bit into Friday, so we still have some more work to do. But this support level at these previous lows, actually just above them, at 365 held, which is a good sign. And we didn't make lower lows, so always love seeing that. We just need to see how this shapes up. And that main test is going to actually be this trend line that we have from the cup and handle breakout, which is sitting actually also at this horizontal trend line around $420. And that will also align with the center band of the Confluence Model Cloud. So getting back above that will really be a sign of strength for MicroStrategy. Until then, we have to be on the lookout for a lower high to be forming. Potentially. So we're always looking out for that. Can we recover, make a higher high, or are we potentially rejecting here and are we making a lower high and are we going to drop down more after that? So looking good today, but we need to keep our eye on it. The daily RSI is fairly reset. That's another good sign. And if we just switch over to the 4-hour chart on the Confluence model, if it will load, has given us a buy signal on the neutral setting. So the Confluence model is taking into account 22 different indicators. And on the 4-hour, mean reversion is very low, RSI is low, but we have not gotten a buy signal on the 4-hour since this last bottom here on the April tariff scare. MicroStrategy had another bottom before that in February. Crypto sold off before the rest of the market, if you recall, with just the early talks of tariffs before anything was implemented. But it's not often that we see those on the 4-hour. So that is another bullish sign to me right now for MicroStrategy. And that is on a candle that has closed. So that's great. Tesla also did well today in terms of it broke down from that wedge pattern last week. But I said these wedge patterns are the least reliable patterns in my mind. I see them break so often where you have a false break in one direction and the other direction, like we looked at with FDV. And we reclaimed the wedge today, closed back within that on the daily. I'm just looking at this on my 144-minute time frame, which I like for day trading Tesla because you get very reliable signals. It is a Fibonacci value. It breaks down the trading day of the Nasdaq equally. This only works on equities. Don't try this time frame on crypto. It won't do anything for you. But we're getting a buy signal here. We have oversold conditions, so that's another good sign. Obviously, this has work to do. We have the 200-day moving average and just this big cluster in the VRVP, the point of control, at $320. So getting above that and this resistance line at 325, getting above that zone would be great for Tesla. And then I anticipate that we could attack the top end of this wedge to see what we can do. So keep your fingers crossed for Tesla, but there are a few early good signs. If we're looking to bull, which I told you on Friday, I repurchased my calls here at around $13.70. We had a good bounce away today. We closed back above the 50% level of this trading range. We also respected this uptrending support line. Yeah, we wicked below it a little bit, but it was nice to see this bounce away today. So I just want to now see if we can continue to have follow through on bull. If we look to Hood, Hood did reclaim this breakdown that it had, and actually we retested the line today during the middle of the trading day. So that was actually really good to see. We are seeing the RSI breakdown a bit on the daily, but it's not necessarily a divergence because it's dropping off as the price action is making lower highs. So you don't have that bearish divergence necessarily. Hood is really looking a lot stronger than Coin. Yes, it's been elevated for quite some time, but there's a lot of hype behind it. I would, really love some consolidation at some point just to, make this sustainable. And I suppose you could argue that we are building a bit of a range right here And we have all these previous tops. So you could anticipate that if we break through that, 110 could now flipped into support as opposed to a rough resistance area. But I'd like to just see a little bit more structure established to, like I said, make the uptrend more sustainable. Coin, in contrast, had that big gap down after earnings, and now we have for 2 days formed a base here at this previous consolidation range and these previous peaks here at that $310 level. So that's a pretty darn good sign for Coin, and it stacks the odds in the favor of this being a daily higher low that we can potentially bounce away from, and then maybe we find resistance on the underside of this trend line. Of course, then we need to see, are we going to be able to make a higher high, or are we making a lower high and then anticipate correcting a bit more from there? But at least for a short-term play, I'm inclined to look for an entry on this tomorrow, and then you have a clear invalidation. If we break below 310, to stop at this, because then you would most likely drop down to 267, I would say, to these the highs of the range, to the 200-day moving average, to this volume cluster. You would most likely move down there pretty quickly. So as long as you put that stop order in, limit your downside risk, this could be an interesting swing play over the next couple of weeks. Okay, moving over to HIMS, and we're looking at this on the 4-hour just so we can see the after hours price action. And earnings definitely disappointed. We talked about this 3 daily candle structure looking quite bearish last week, and I sold out of the rest of my position there. I had already closed my options. I sold all my spot because, I am just trading this. And so we had almost a 10% retrace after earnings today. I'm now looking for where we can find support, and I imagine we are going to start to find some support at these previous lows and these highs right in here. So that's around $52. And we also have this underside uptrending support that has been forming since the mid part of April. So we could also anticipate a bit of support kicking in there. I suppose it would be our 4th time retest. 1, 2, 3, 4. So there's always that chance that we break down on a 4th time retest, but we have to assume support is support until it's not. And so if we come into that $52 level, maybe as a few days pass, we intersect this trend line around that zone, I would be inclined to get into another long position to see what this can do. And if it breaks down, I love it because we have a clear invalidation to stop out of our trade. Looking to Palantir, they had really strong earnings, and we were finally able to mount a meaningful move away from this overhead resistance line that we broke through and then have just been toying with for the last couple of weeks. But we said that that was a very bullish sign for Palantir because most stocks aren't able to do that with overhead resistance. They end up rejecting from it time and time again, and then they might revisit it months down the road. Palantir broke through. They topped $1 billion in revenue for the first time ever. So it seems we are seeing that scenario we discussed where we're having that breakaway. We're in blue sky territory. We don't know exactly where this is going to go. And let me just reposition this down. So we'll have that breakaway. And if we ever correct in the future, you can now imagine that this trend line would provide strong support. And this trend line can now be a bit of a line in the sand for you for trades. If we break below that, it's a signal to exit because there's most likely going to be weakness coming into this name for quite some time. And if you ever do eventually break down from a zone like this, if you ever miss it, most likely it will be retested as resistance before we continue to move down. So just look for that in the future as your sign to exit or your second chance to exit if that ever happens. But right now, for the near term, Palantir is looking strong, and we just need to see what it can potentially do. Just revisiting one from last Friday as well, SMLR, which was getting close to an invalidation for me because I had bought in this zone here again after unloading my position, getting into resistance here, and we broke these previous lows. I was about to get out of the trade, but I figured I'm just going to wait for earnings, and they had a massive earnings beat. Expectations were around 40 cents, and they came in at like $5.40. There was a good reaction after hours. We pulled back a little bit since then, but we did get back into this center confluence cloud. On the 4-hour, we printed a buy signal. We are moving up from there. Granted, we've had one of these before, but we rejected from the center confluence cloud. So what I'm looking for now, and I'm so sorry, that was the 1 hour we were looking at. Here is the 4-hour where we got that buy signal. We are still into a bit of resistance on the center confluence cloud on the 4-hour, but what I'm looking for this to do, if it can rebound, is to move up into this trend line again, and then that would give us our attempt at a 4th time breakout, which can be a more meaningful move. And this isn't going in a straight line. Just like there's lots of chop going up and down, we're going to anticipate that happening again for SMLR. But listening to their earnings call, they are much more thoughtful with their Bitcoin strategy than a lot of other players out there. So I think that will work in their favor over the long run. And they are really accumulating a lot, but they're doing it with profits from a very profitable business. And then they also announced some new lines of cares and brands for heart disease and different things that they're doing. But overall, it seemed positive. This stock has been up, down, and all around, but the structure off this bottom was looking strong to me. We broke this previous low, but I'm hopeful that we can mount a rebound here, and I'm just watching it carefully to get out if there are any warning signs. All right, and just want to mention ATAI because I did take some profits today. I'm still holding most of my spot. I sold just about 20% of my spot, but I did sell my call options. I still think this can move up higher. The fact that this was running on Friday when the rest of the market was selling off is a huge sign of strength. And if you recall, we got in here at the $2.50 range. And the reason I sold is if we just compress our timeline through all this consolidation, we are starting to approach these previous peaks here. So maybe I sold a little bit too early, but it's in that $4.25 to $4.90 range. And I could just imagine some selling coming in here, especially because we've been moving up at a fairly rapid clip. We are printing mean reversion dots. This could obviously go a little bit higher, but if we even look at it on the weekly RSI a bit overextended here. So maybe I sold too early, but I locked in some profits on a decent move. That was from the entry there up to where I sold about 86%. In a couple of weeks. So not too bad overall. But if this one really runs, this could be, maybe I would be kicking myself, for selling way too. It seems like we're going to have some consolidation. And if we pull back, set a new base, I would be looking at this potentially to get in again on a position. And I wanted to bring up Figma again because we talked about it last week. And this one, really, I think the IPO got hurt by how bearish the price action was last week, and we have sold off, and we are almost to the public launch price of the IPO at $84. If you got IPO shares, of course, those were down here at about $33, which is why I have the fib retracement drawn like this. So if you do want to get in, it's still risky, but in this zone, you could potentially take a stab at it and then just say, all right, that $84 at the IPO price right there is my line in the sand, and I would stop out below that and then, see where I find a base. But not all IPOs are created equally. Actually, Circle broke down from some today too. I won't bring up the chart, but I sold some of my Circle position, and I'd be looking to reload that in like the 130 range. I think around 137 was the level. All right, I didn't want to get into the treasuries again, but because we talked about them on Friday and they had a little bounce, we should. And I had a limit order fill here on DFDV just into these previous lows, these previous tops on Friday. We are on the daily. We haven't bottomed on the side, but we're about to print a mean reversion dot. The 4 hours way oversold. So I got into a little position, and my line in the sand now for stopping out is at just under $12. At these lows, I put it at maybe I did 82 or something for my stop order, because there is a big gap below to the next supports, which would be coming in between 566 all the way down to 373. So if this falls out of bed and hits the price target from this wedge pattern, it would be really bad for DFDV, but they are stacking more. you know, they seem to have structure. So let's see if this can recover from here. Just remember, it's a higher risk play, so please have your stop orders in place for a name like this. ASST started showing a little bit of strength today too, breaking out of this falling wedge pattern. It still has a lot of follow through to do, and there is no volume on this right now, so not super convincing. And we had a previous falling wedge here that we broke out from that it just rode the other side of as support on the way down. So still has some proving to do. Early signs of strength along with some of the other treasury names today. Even Naka had a decent bounce today and is printing a buy signal now on the 4-hour, which was very oversold. Didn't quite get to the price target here of 379, but this is one you could potentially consider just because of these signals you are getting. But again, have your stops in play. CEP had a little bit of a bounce as well, but we are still struggling with this 382 line at $29. We rejected from it again towards the end of the day. So we really want to break these previous highs at $29. If we can see that break, because that's been resistance for the last few weeks since the, 23rd of July there, that would be an early sign that getting above that would most likely lead to a bit more meaningful recovery. And you know what? Just so we are playing by the rules, I am going to set my alert there. So now I will have that pop up if CEP does that, and I could consider adding to my position. And I like levels like that because they normally act as support and will also give us that invalidation point to set our stops to. Okay, and last one too is UPXI, which is the largest Solana treasury still. We did find support at our 23.6 level and that model center cloud here on the 4-hour. So great sign, had a good recovery today. I know this doesn't look like much, but from the bottoms last week, we are already up 15%. So this one, I am happy with my position and my options. You know, could have always added more, but don't want to get greedy. And like all the others, this still has some proving to do in terms of flipping the trend. And on the 4-hour here, we didn't quite get a mean reversion dot or reset on the 4-hour RSI like we did on the other charts, but I'm using the other charts as a bit of a leading indicator. And I'm just thinking that there might be a bit more strength and momentum behind this name. Okay, last two, which are requests, we have CRWV, which we don't have daily mean reversion data on yet because it is so new, but the daily RSI has almost reset. We didn't quite find support here at the 50% of the range, but we have been forming a little bit of a base right here at that even $100, and we know that psychological numbers can often act as support, and that also lines up with this previous consolidation range. These previous lows right here are at 105, and these swing lows are at 97. So we're right in the middle of that. If we can prove this as a double bottom and start making a higher high past this previous little peak here at 119.50 or 120, that would be the first sign of strength. So what I would want to see is that we can pass that peak, then perhaps at a higher low and continue to move away from there. Those would be the earliest signs of some kind of recovery in the structure. If you want, it seems like you could even draw a pretty clean downtrending resistance line right here. Oh, look at that. Lines up perfectly with all those daily swings right there. So then we have 1, 2, 3, 4, 5 retests of it. That has really been strong downtrending resistance. But as soon as it breaks as well, that's going to be a leading indicator for you that things are turning for this. And often, remember, you can anticipate a breakout and then a back test of this for support before the price action moves away. Okay, and last one on the request list is QS, which, if memory serves, we perhaps looked at a couple of weeks ago. Oh, and let's just see here on the daily. Let's go to the weekly. I haven't looked at this since then, but it had been in a very long weekly consolidation range, had a breakout. I assume this is a treasury play. Must be, or they have some kind of meaningful shift in their business or a new partnership. Who knows? But if we're just our levels here, we are finding some support at the 382 on the weekly, so that's good. We've come down off the highs. The daily does have that sell signal in play, but we're finding support at the center confluence cloud there. So we are into a bit of support, but it still does overheated. We are almost into that lower cloud here on the 4-hour. The 4-hour RSI has reset. We just got a mean reversion dot. So this does seem like it's set up to have a little bit of a bounce. It's not a name I know enough about to say I would, invest in it. You can also look at these previous tops that are at about $7.80. That could provide a support if we dip a hair lower. But what's good now is you have this dynamic support you have the 382 level there. We also saw that on the weekly that we were getting support in that range. So if this base continues to form, you could look for an entry here and put a stop order just below at like $7.98, or give yourself a little bit of room to run to see if we find support at these peaks, and then put a stop order just below that. Because if we break down from that, there's a good chance we're going to go all the way down to this previous swing low at $6.19, and then potentially even as low as the 200-day moving average and the bottom of these candles. But, if you know more about the structure of their treasury or whatever this is, you are into a bit of support, even though you're still overheated on some time frames. It could be worth a bounce play, but not for me personally. I have too many other things I'm looking at right now. Okay, so that's it for the charts. As for events that could move markets this week, we have ISM Services PMI on Tuesday, unemployment claims on Thursday, and FOMC member Mosallam speaks on Friday. I suppose we also have Trump tweets that are always a wild card that we need to keep in the back of our mind. However, the real thing to watch is price action. Holding those lows of last Friday and closing the week strong, ideally with an engulfing candle that engulfs that red candle we saw last week, would be the strongest sign. Until then, I will be posting updates on X for all the important events this week, and I will see you all on Friday for the weekly wrap-up. Bye for now.